Hey there, welcome to Kneppy Invest. Pointerra released their Appendix 4C on the 19th of January. And since I am a shareholder, and this was a good quality report from the company, I thought it's a good idea to do a video on this particular Appendix 4C. Now, there were no surprises in there for me, but the market did like it. We did see a share price rise over 12% on the day. Now, I don't think there was any reason for the market to get too excited because even though this was a cash flow positive quarter for the company and we did see a significant increase in cash receipts, this should have been expected because we have seen the annual contract value for Pointerra increase quite regularly over the past few years, up to something like $12 million at the latest update, which will be updated further towards the end of January. And there is potential that we might see the annual contract value reach $15 million. That would be a top end of my particular expectations. And if it did get to $15 million, that would make me very happy. But the last update, it was in between 11 million and 12 million. If you divide that by 4, you get about $3 million, which is exactly what the cash receipts were for this current quarter. Now, more than likely, cash receipts will be lagging behind the annual contract value. So we saw that in the previous quarter, and it just caught up in this quarter. So I don't think the market should have been too excited about this particular Appendix 4C from Pointerra, but it was, and it's not surprising that we have seen the share price pull back a little bit today. So I'm recording this video about 1 hour after trading has begun. But in saying all that, I am excited about the future of this company, and I'll talk about why I'm excited about the future of Pointerra, why I am a long-term holder of this company, and I hope to be a long-term holder, maybe 10, 20 years. And if I'm a holder of this company for 20 years, more than likely the value of this company would be significantly higher than it is now. Now, I am slightly changing my investing strategies where I am focusing more on short to medium term movements in the share price of companies. But this is not true for Pointerra. Pointerra will be my portfolio for as long as possible. It's one of the select few companies where I don't really care what the share price does in the short to medium term. In fact, if I do see the share price fall a fair bit from here, I will become a net buyer because I do think there's a lot of potential for this company. And I'll talk about why I'm high on this company during this video. But to really balance out my bias, and I'm definitely biased about Pointerra, I'll try to add some bear arguments against Pointerra during this video. So if I am being a little bit too biased in favor of this company, just keeping that in mind that I am a shareholder of this company and hope to be a shareholder for many years to come. What does Pointerra do? They are a data as a service provider, and I think those sort of terms, software as a service, data as a service, food as a service, which I think is not a real thing, I've just made it up. Those sort of buzzwords get me a little bit annoyed these days. But anyway, they are a data as a service provider. And maybe a better way to describe it, or describe Pointerra, is they are a 3D data as a service provider. They help companies manage, share, store their massive 3D data sets. In fact, if you go to Pointerra's website, they are quoted as saying the world's fastest true end-to-end 3D data solution. Their Pointerra 3D product, which I do have up here, is broken down into 3 components: core, analytics, and answers. And to be honest with you, more than likely in my own life, I'll have no need for what Pointerra provides unless I decide to buy a company that uses massive 3D data sets. But if you do own a company or do know of a company that has massive 3D data sets and needs some sort of solution to handle those 3D data sets, perhaps Pointerra is the company for you or for that business. Now, one of the things I did or do like to see when I go to a company's website, particularly for companies where I'm trying to understand the benefits of their products, is any sort of end user case study. It just makes me better understand why this company and what they do is beneficial for the end user or for their customers. I actually did not find that on Pointerra's website. Doesn't mean it doesn't exist, but I would like them to just give me some case studies of how their Pointerra 3D is beneficial for the end user. Now, a few other facts in regards to Pointerra. They were founded in 2015 and didn't take Pointerra very long before they listed on the ASX through a backdoor listing. That company was called SolarSub Technologies. I'm not sure what they do, but whatever they were doing more than likely failed, or the management just gave up and decided there was no future in SolarSub Technologies. And Pointerra did list through that backdoor on July 2016. The current CEO is Ian Olsen. He has a 7% holding in the company. And one of the major shareholders in Pointerra is Bevan Slattery, a fairly popular name in investing circles. He has a 7.4% stake. And it was really the introduction of Bevan Slattery to the Pointerra shareholder list that really brought Pointerra to the public eye. And that is a benefit of Bevan Slattery taking a position in this company. But when he took a position in the company, it introduced some negatives to Pointerra. And one of those negatives was we did see a massive re-rate in the Pointerra share price. A lot of people got FOMO. They needed to buy this company because the share price was going through the roof. But eventually, when a company like Pointerra gets a little bit overvalued, and it definitely did get overvalued, the share price reached a high of something like 80 or 90 cents. And at that point in time, the valuation of Pointerra was quite ridiculous. And what that means is some people, some investors will buy near the high and actually introduce some negative sentiment into the company, because eventually when the share price will drop, and it always does drop when you get that sort of FOMO rise in the share price, you do introduce that negative sentiment. And there is a bit of negative sentiment right now in Pointerra, and that means the share price is dropping. Now, that's actually a benefit or a positive for some people, because as the share price falls a little bit further, those who will have high conviction about the future of Pointerra know that the more the share price falls, the better it is for them, because they can buy more shares in the company. And I am actually looking at the share price, not on a day-to-day basis, but if I do see the share price fall significantly from here, share price currently is at 40 or 41 cents, I will take a further position, because I am high on the future of this company. The current market cap is not $275. I forgot an M there. It's actually $275 million. That's at a share price of 41 cents. And the ticker code is one of my favorite ticker codes on the ASX, 3DP, because in the ticker code, you've got everything you need to know about the company. They're all about 3D, and P is for Pointerra. Now let's have a look at the financial year 21 results and just compare it to financial year 20. Sometimes I like to compare the results of a company from 5 years ago, but Pointerra isn't that old. So at this point in time, I just want to compare year on year. And when you look at revenue, $3.98 million of revenue doesn't seem too high, but it has increased from 1.2. So that's in between tripling and quadrupling from the previous year. But still, you might be questioning, particularly if you don't know much about this company, that on a market cap of, say, 250 odd million, only having revenue of 3.98 million, you must be questioning the valuation of Pointerra. And that is one thing I have been questioning about Pointerra, particularly when the share price reached 80 or 90 cents, is the valuation. But there are some reasons to like where Pointerra is heading, and I'll talk about that during the next few slides. And we are seeing the revenue increasing at a fairly quick rate, and we'll have a look at the annual contract value at the most recent update of that, which was a few months ago. And hopefully I'll do another video when they release their new updated ACV towards the end of this month. Now, even though they only have revenue of $4 million, they were only operational cash flow negative of $250,000. And that's one of the reasons I really like Pointerra, is they are running a very lean, tight ship. They don't have a lot of costs. And I think one of the reasons they don't have a lot of cost is there's not much competition out there, and their product is unique. And there's a lot of software as a service companies out there who are growing their revenue at fairly quick rates. They have really high revenues, but they are highly operational cash flow negative. And some people describe this or that situation with software as a service company. It's all about a land grab. They have to spend a lot of money to get as many customers and clients as possible. And the reason they have to do that is because of competitors. If they don't do it, the competitors will. And it's all about getting as many customers, because their hope is once the customers are using their service, they won't change. It's going to be sticky. And in those sort of situations for those companies, there is a lot of competition, and some of these companies won't make it in the long run. I don't think Pointerra has that problem, and that's why their cost base is fairly low. And that means as their revenue, annual contract value rises, I think this company will or has the potential to become highly profitable. In a way, Pointerra reminds me of Pro Medicus about 5 or 6 years ago. Pro Medicus is the same sort of company, not in terms of what they do, but in terms of they had low revenue, low cash receipts, say 2015-16, but they didn't have many costs. So they they were operational cash flow positive. And I think the value in 2016 of Pro Medicus was something like $200 million. So very similar to where Pointerra is now. And at this point in time, Pro Medicus market cap is maybe $5 billion. Now, that doesn't mean that Pointerra will follow that same trajectory, but it just reminds me, or Pointerra right now reminds me of where Pro Medicus was about 5 or 6 years ago. And of course, Pointerra is not profitable just yet, loss-making, $1.5 million in the previous year, had $5 million of net cash. Price-to-sales ratio at 68 does seem high, but again, the revenue for this company will be climbing really quickly over the next few years. And I think because of their low cost base, with the scale this company will have and show to the market, I think that price to sales ratio can remain fairly high, and the market will potentially re-rate Pointerra based off that. Now, at the end of the financial year 21, the annual contract value was 9.8 million. It has been updated since then, and that had increased 24% from April 29. So that means that was May, June. Over a 2-month period, annual contract value rose 24%. Before we have a look at Pointerra's most recent Appendix 4C, I just want to go back 1 year ago. And the reason I'm looking at their statement of cash flows from 1 year ago is I want to compare apples to apples, not apples to potential oranges. So I want to get rid of any possibility of seasonality to a company's performance. I don't think there's any seasonality to Pointerra, but there are some companies out there that do have seasonality. Now, Pointerra's receipts at customers 1 year ago, $635,000. They also received $578,000 from government grants and tax incentives. Now, in my opinion, government grants and tax incentives does not belong in the cash flows from operating activities section because it is not part of the operations of a company. Now, that's probably an argument for another time, not here, but usually I will subtract the government grants and tax incentives from the net cash from or used in operating activities. And for this particular quarter, Pointerra's cash flow was negative $231,000. When you subtract away the government grants and tax incentives, you get around negative $800,000. So even though they only had cash receipts of $635,000, they're only operational cash flow negative by about $800,000. And that shows you there's not a lot of costs in this business, and costs aren't increasing at a great rate either. And you'll be able to see that in the next slide when we look at the most recent Appendix 4C or statement of cash flows. They finished this particular quarter with only, well, not only, but $4.5 million of cash, and the annual contract value, or the ACV, stood at $6.88 million on the 29th of January 2021. And when they release the updated ACV towards the end of this month, there is a chance we're going to see ACV double over the past year. And if it does double, I would be a very happy shareholder. Now let's have a look at the most recent Appendix 4C, and the market did react quite positively to this particular quarterly report. Share price increased by over 12%. But again, I I sort of understand why the market did react like that, but it really shouldn't have, because to see receipts grow to $2.8 million for this particular quarter shouldn't be surprising, because the ACV stood between $11 and $12 million. And if you divide that by 4, you get between about $2.5 and $3 million, which is exactly where receipts came in for this particular quarter. So receipts grew $2.2 million for the same quarter from last year. But when you look at the cost increase, you don't see any significant increase in costs over the past year. In fact, research and development steady, product manufacturing and operating costs up $300,000, staff costs steady, and administration costs up $200,000. So costs up about $500,000, maybe $600,000, because I didn't include stuff like administration and marketing. But cash receipts, again, up $2.2 million, costs up about $500,000 to $600,000. And that meant they were operational cash flow positive by $800,000. So that improved by $1.6 million from this time last year, and they did not receive any government grants and tax incentives for this quarter. And the other thing to notice with Pointerra, and I don't include cash flows from financing or investing activities, and the reason I don't include that for a lot of companies is because not a lot is happening in those sort of activities. And for Pointerra, nothing is happening in those activities. So that means that operational cash flow of $800,000, most of that falls to the bottom line, and the cash in this business grew from $4.3 million to $5 million. Ever since I started doing these Appendix 4C videos, I have had a few people question me why I really focus on cash receipts, and in particular cash receipts history for a company, and why I'm really not obsessed, but I really want to see whether a company is operational cash flow positive or negative. And when you look at Pointerra's announcement, right at the beginning of their announcement, even though it goes many pages, something like 10 to 15 pages long, they had a highlight section at the beginning. And their first two highlights were in regards to cash receipts and the cash flow from operations. So they really wanted to highlight that this was a record cash receipts quarter for the company at $2.85 million. And they also really wanted to highlight that the company was operational cash flow positive by $800,000 for this quarter. And the reason why this is important to me is because this tells me that the management of Pointerra, their interests are aligned with my own interests. There are some companies out there who are only focused on increasing revenue or cash receipts in the future. They don't care about costs. They don't care whether the company is operational cash flow positive or negative. In fact, I saw that with a company who released their Appendix 4C today on January 20. We saw a massive increase in cash receipts, but we also saw a massive increase in costs, and the company is still not operational cash flow positive. And a lot of companies out there, particularly software as a service companies, are only focused on increasing their revenue, their cash receipts. And I want these companies to also be focusing on their cash flow from operations, because if you're continually operational cash flow negative, over time you need to do capital raisings and you dilute the current shareholders. And that is one thing I don't like about a lot of software as a service companies out there on the ASX and also on the NASDAQ. So it's really good to see that management interests or their priorities are aligned with my own interest in regards to how a company is performing. Now to the cash receipts and annual contract value for Pointerra. This is old. This is not updated because we haven't seen the updated ACV from Pointerra, but it's decided to include this. So when we do see the updated ACV in a few months, we can see how they have performed or where they are heading based off the trajectory of ACV going back to the quarter one of financial year 20, when they only had $1.66 million of ACV. And we are seeing ACV climb at a fairly consistent rate. It rose by $2 million from the previous quarter and then $2 million from the previous quarter to that. So if we see another rise of $2 million, we will see ACV for Pointerra approach $14 million. But I think there is potential. We might see ACV in near $15 million or even grow beyond $15 million. And if it does that, I think that will increase the interest in the market around this company. Now onto the cash receipts history for Pointerra, and I could be sort of doubling up here because looking at the annual contract value growth over time and the receipts history growth is almost looking at the same thing, because we know annual contract value is climbing through time, that should lead to the fact that receipts are growing through time. And that's exactly what is happening with Pointerra. Receipts are growing, and they're starting to grow at an accelerated rate, potentially based off the most recent Appendix 4C. So I actually have included an exponential growth rate line. That's that dotted black line, and it is growing at an exponential rate. Whether that's going to continue in the future remains to be seen, and that's why I'm excited about the next quarter results, because if we see it higher than the most recent quarter, that would be even more exciting. But one thing you'll notice here is there is a bit of lumpiness to the receipts over time, and we can see that just by looking at the last 3 quarters. It's gone from 1.5 million down to less than 1 million and up again to 2.8 million. They actually did mention this in their commentary in the Appendix 4C, that there is a bit of lumpiness there, but over time that lumpiness should be smoothed out, which makes sense because as they get more customers, the cash receipts they do get per quarter should level out, should grow at a consistent rate. And if you do calculate the quarterly growth rate of receipts from the December quarter 2017, we get a 29% number. That's a nice growth per quarter. But over the last 4 quarters, receipts have grown at 45% per quarter. So that sort of is aligned with the argument that receipts are starting to grow at an exponential rate. Now, I don't think receipts will grow from this current quarter to the next quarter because of that lumpiness factor. So it wouldn't surprise me to see receipts in the next quarter down below $2 million again. Maybe participants in the market will have a little bit of a hissy fit when that does happen. But just keep in mind that with ACV continually growing, we will see receipts grow at a consistent rate over the next few years. But just be aware, there will be a little bit of lumpiness there, and don't base any decisions based off that lumpiness factor. Now let's have a look at Pointerra's daily chart. This goes back to June 2020, and the reason I only go back that far is because the share price was about 5 cents. The day before, it was announced that Bevan Slattery had taken a position in this company because he thought Pointerra had a significant future. And the share price jumped from 5 cents all the way up to almost 10 cents. And then the share price just kept on climbing over the next 7 months. There was once there was a little pullback in the share price. That was in September, October. But the share price rose from that 5 cents all the way to a high of 92 cents, which was reached in February. So that's a nice, almost 20 bagger for holders during that period, particularly if you were a holder in June and then sold out at the high. More than likely, most holders wouldn't have sold out at the high. They might have taken profits along the trajectory or the uptrend we did see in the share price. But a lot of times when you see the share price of a company 20 bag over a short period of time, there will be some profit taking eventually. And if the profit taking is strong enough, the share price can move from an uptrend to a downtrend, and sentiment can shift from positive, even highly positive, to negative. And that's exactly what's happened with Pointerra over the past year. The share price has fallen from 92 cents all the way down to a low of about 33 to 32.5 cents. And the share price is in a downtrend right now because of that negative sentiment. And the problem with the negative sentiment is the share price can fall further from here. But that is an opportunity or possible opportunity for those high conviction long-term investors who think there is real high potential for Pointerra over the next 5 to 10 years. They can buy more shares of Pointerra at lower prices. So this could be a negative or a positive depending on what your viewpoint is about Pointerra. And we did see the share price rise about 12% when they did release this particular Appendix 4C. And the share price has finished right on the 100-day moving average. And that 100-day moving average has been a little bit of a resistance level or resistance point for Pointerra over the past 8 months or so. We did see share price get above that for a brief period in September, and the share price pulled back quite sharply. So at this point in time, if I do see the share price fall quite considerably from here, particularly if it gets below 30 cents, that's when I might add to my holdings in this company. Or if I start to see sentiment shifting, that's another possibility of taking another or increasing my holdings in a company. So if I see either of those, that's when I'll take further positions in Pointerra. That's all I have for Pointerra's most recent quarterly report that they did release on January the 19th. The market did react quite positively to it on the day, but I do have high opinions about this company for the future. There are a few negative things in regards to Pointerra. I think the valuation could be, or some could argue, it's a little bit too high, and there is negative sentiment around the share price, but that negative sentiment has introduced some possibilities, some opportunities to buy Pointerra at lower share price, particularly for those high conviction holders. If you do have any questions about this company, just leave it in the comment section. Possibly I will or will not answer any comments or any questions you do have, depending on time constraints. And the last thing I always should mention is I am not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.